The largest oil and gas listing in London since 2014 takes place on Friday, 3rd of February, as Diversified Gas Oil comes to the alternative investment market. As a US company, it's raised $50 million with what it calls quality blue chip institutional investors to give exposure to the company's assets in the Appalachian Basin, which straddles Pennsylvania, West Virginia and Ohio. Rusty Hutson is the chief executive and he joins us now. Welcome.
Thank you.
First of all, congratulations. Or the largest listing in the oil and gas space since 2014. Talk to me first of all about why London and why now?
Sure. Well, really, it's not our first foray into London. We had a listed bond here back in 2015, which was real successful with a lot of the institutions that we were pitching the IPO to, so that was one reason. Secondly, the type of institutions that we could pitch the company to here, high quality institutional investors that, for our size in the U.S. market, probably there's no comparison or no comparable market for us in the U.S. But thirdly, really, we feel like we differentiate from everybody else here on AIM as in the E&P sector from the standpoint that we have revenues, we have cash flow, and we'll be paying a dividend right out of the gate. So
you're profitable. That's the real key thing, and I mean that's obviously very important at the moment. What about the assets? Is it conventional?
Conventional assets in the most prolific region, natural gas region in the U.S. It's also the oldest natural gas producing region, produces over 1/3 of the natural gas in the United States.
When you say most prolific, how are you measuring that? What's your capability?
In terms of the gas reserves in the U.S., between the shale plays and the conventional assets, the most prolific natural gas play.
What do you say is the differing factor between you and others in this area here? When you come to London, how do you sort of sell the placing?
Yeah, I think it's our operational efficiency, our ability, whether natural gas and oil prices are low, to be able to still produce cash and be able to pay a dividend regardless of the commodity price environment.
And do you have any peers?
Very few. We are one of the largest conventional players in the Appalachian Basin. We have some competition from that standpoint, but because of our long-term relationships and the amount of years that we've been operating in the basin, it kind of gives us a leg up on those.
What about the selling point for investors here? You talk a little bit about how you stand out and so forth, but what about production, the future, where you're going to go, how you're going to develop? The costs involved in doing that, of course, is also important.
Yeah. We're seeing a lot of opportunity right now on the acquisition side. A lot of assets that are coming to market from larger companies that are looking to downsize and move non-core assets away from their portfolios. We're seeing really good multiples on those assets. So really what we're seeing right now is we're in a mode of really what I would call roll-up strategy. We're seeing good multiples, and we're able to execute that strategy pretty well at very good multiples.
Do you have any money sitting on the sidelines waiting for acquisitions should they come along?
Well, as part of the IPO process, obviously that's what the capital raise is for, is really to prepare ourselves for all the opportunities that we're seeing.
One other thing I want to talk about is how the landscape has changed for you in the States at the moment with Donald Trump coming in. We've heard a lot about him and his attitude towards, his loosening of the attitude towards what had previously been an Obama institution, which had been very, very strict on the fuel business, petroleum business. How do you think things have changed for you in the sector?
I think the biggest change will be on the regulatory side. Not necessarily from the fracking and production side as much as it'll be on the pipeline side, freeing up these companies that have had applications to put in pipelines to move natural gas to other areas of the country that don't have enough today, being able to put those pipelines in place and getting the gas moved to the other regions of the country. I think it's the regulatory piece that he'll have the most effect.
Yeah. Okay. So let's take a look at 2017. What do you see as the headlines now for this year for investors?
For investors, for the company, yeah. I feel like we will continue to acquire assets as the year moves on. We'll increase our cash flows, and as we do that, we have a progressive dividend policy that we'll be able to put 40% of the free cash flows back into the dividend. And as the dividend yield grows, we feel like the capital appreciation in the stock will catch up with it.
And how about the oil market generally, and of course in the face as well as potentially rising interest rates here in the UK? We just heard from the Bank of England they're quite bullish on inflation, and of course the Fed saying it's going to raise interest rates. How does that affect you?
I think that overall, that with the rates rising, it affects the dollar. Obviously, it makes it a little stronger against the pound. I think oil prices will continue to hang out in the $50 to $60 range. I think that with shale play in the U.S. being the swing factor, I think we'll continue to see a $50 to $60 oil price, and natural gas prices in a range of $3 to $5.
Rusty, thanks indeed for dropping by. That's Rusty Hutson, the Chief Executive of Diversified Gas and Oil, which is coming to the London market and listing on the alternative investment market on Friday morning.